You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Thursday, March 8th. 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Thursday. First thing to know is the European Central Bank policy meeting. You've got to know about that. The European Central Bank is all but certain to keep policy unchanged at the conclusion of today's meeting at 12:45 Greenwich Mean Time, which is about 7:45 a.m. Eastern Time. But it may tweak its communication stance to offer at least a few clues about its progress towards ending its unprecedented bond purchases later this year. President Mario Draghi will hold what will be a closely watched press conference 45 minutes after the rate announcement. How he views signs of undershooting inflation and any hints on when the central bank plans to end its 2.5 trillion euro stimulus program will be important. Trump to make formal announcement on tariffs. Amid growing pressure to exempt U.S. allies, President Donald Trump is expected to sign an order to slap tariffs on steel and aluminum imports during a ceremony scheduled for 3:30 p.m. Eastern. Trump plans to offer Canada and Mexico a 30-day exemption from the tariffs, which could be extended based on progress talks on amending the North American Free Trade Agreement, NAFTA, a White House official said on Wednesday night. That raised hopes that the tariffs may be less onerous than feared, easing nerves over a full-blown global trade war. Third thing to know is global stocks tick up with ECB policy and Trump tariffs in focus. Global stocks inched higher as investors awaited an update on monetary policy from the European Central Bank and more details about potential U.S. tariffs on steel imports. Asian shares ended broadly higher, with stocks clawing back gains after sliding in the last session. Fourth thing to know is oil prices are steady after a big fall amid soaring U.S. output. Oil prices steadied after falling sharply the previous day on the back of record U.S. crude production and rising inventories. U.S. oil production, driven by shale extraction, rose to an all-time high of 10.37 million barrels per day last week. This is according to government data, keeping it above Saudi Arabia's output levels and within reach of Russia, the world's largest crude producer. And the fifth thing to know today is Bitcoin nurses losses in wake of SEC warning. Bitcoin prices were lower, nursing losses from the prior session, after the U.S. Securities and Exchange Commission issued a statement saying that online platforms trading digital assets are considered securities and need to register with the agency. Wednesday's statement came after weeks of subpoenas from the SEC in its attempt to establish better control over the many trading platforms and exchanges. Our second story today is from, let's see here. It is from dailyfx.com. Gold and silver trading outlook is bearish as sellers show up on each rally. Gold came close to the 2013 trend line, in addition to the underside of the December trend line, and again was swatted back lower. If the bounce dating back to last week is over on yesterday's turnabout, then the technical posturing is weakening, as lower highs are becoming visible since the peak in January. There's still good support down near 1300, which was last evident with the reversal bar etched out on March 1st. With lower highs potentially in place, a break below 1300 would likely have the 200-day December 2016 trend line in focus as targeted objectives. Getting back to the 2013 trend line, as long as the price stays beneath on a weekly closing basis, it will continue to be a point of interest to sellers. It is a line in the sand with much influence. And our third story today is a story from sfgate.com. The former Target manager who made millions in a trade that just blew up wants you to know he's doing just fine. Seth Golden's life irrevocably changed in 2011 when someone emailed him the prospectus for a fledgling investment product. At the time, he was the manager of a Target store in Florida and trading on the side. The email contained an idea that would turn him from an amateur trader to a multimillionaire, and he almost blew it. Golden glanced at the marketing materials for the ProShares Ultra VIX short-term futures ETF and decided to pass. It was only when his email contact reached out a second time months later that the gears started turning in Golden's head. He researched the UVXY, which allows traders to bet on or against an immediate rise in stock market volatility, scouring countless materials and speaking with industry experts before trying his hand at trading the complex and frequently misunderstood volatility fund. It took a little bit of time for me to actually pull the trigger on my first trade, and it kind of just evolved from there, Golden told Business Insider in a phone interview. I learned how it worked on the surface and then started modeling for specific adverse shocks. He configured a strategy that amounted to a bet against wild swings in the equity market. That is to say, he was positioned for relatively drama-free stock trading, and he started doing this as stocks were settling into what is now a 9-year bull market. He made a fortune and claims he grew his net worth from $500,000 to $12 million in 5 years. Well, what a nice story. And that, ladies and gentlemen, is news you can use for today, March 8th, 2018. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.